Let's go, guys. How's
Let's
everyone?
go.
Happy Monday. Welcome to Gap Mastermind.
Yeah, in the back, feeling it, feeling it. Well, welcome to Gap
Yes.
Mastermind. Once again, as Josue said, happy Monday. Gap Mastermind is where we try to give you that edge, right? Growth, action, production, in all different facets. I'm actually very excited about our guest today because, as you guys know, I'm very fond of the subject of investing. I don't think it's a subject that you can't not learn, right? I think that wealth is an area of study, and any chance you get to learn an angle when it comes to investing, especially since you're in real estate and you're part of one of the best investment classes that there is. You got to take every chance you get to listen to somebody like our guest today. Before we get started, though, reminder, we've got Build at Sea coming up on August the 3rd. That is right around the corner, ladies and gentlemen. I have put the link to the website in the chat. So please go to that. If you haven't registered, a lot of heavy hitters going. I mean, there's probably like 10 people from, our culture center in Orlando going. The speaker lineup is fire. By the way, you get to be on a cruise and on vacation, which is incredible. And you get to learn from the best. So make sure that you go there.
We're
Wanna
actually 21 days away, Bobby. 21 days away.
21? Oh my gosh, guys, this is 3 weeks, man. It's gonna be there, and you're gonna be on the boat. Um, One thing I wanna another announcement. I saw Joseph had the 305 number and reminded me. So as you guys know, there's kind of a beta at EXP Realty with a partnership with PadSplit. I did a presentation on PadSplit on Gap Mastermind probably maybe a month ago, a month and a half ago. So they're looking for an agent in Miami that works with investors to be a part of the beta program. They've already got multiple kind of hubs. Orlando's one of them. I got one of the agents in my office working the pad split leads. But this is a way for you to basically get free leads, right? That's the beautiful thing about EXP. They understand what you need and they understand you need leads. So there's a department called Revenos, and they continue to add different sources and different lead sources. Pad Split will be one of those lead sources, but it takes kind of a savvy investor agent to work those leads. You'll go through a training program, all that stuff. But if you're in Miami, in the Miami area, and you want to get free leads and you want to get investor leads and you work with investors, please put your name and info in the chat. Let me know. I want to be a Pad Split agent, and we'll get that. We'll get you going down there. So without further ado, did I forget any announcements, Josue? I know Rebecca had a list of things we were supposed to announce. Did I forget something?
Yeah, hey, boss lady got us on check too.
Boss lady got
But
me on. She got check marks in the message. I mean, she's like,
oh yeah.
did you
No,
hit
we're
this
good. So
point?
far, everything you touched on everything, and what we'll do is before we close out, we'll just send another reminder of what we just spoke about, what are some of the updates. But let's
Yeah.
move on, man. I'd like to introduce. Go ahead.
No, and one final thing, YouTube channel EXP Global Alliance. So all of these are on our YouTube channel, all the Gap Masterminds on EXP Global Alliance. So make sure you subscribe, and so you have access to that. All right, Josue, kick it off. Kick off our guest.
All right, guys, man, I'm going to introduce our special guest today. First of all, he's a great friend of mine. I've known Joe for many, many years, but let me touch on this. He's the managing broker of Duke Allen and Company, a firm specializing in hard money, private capital, and real estate investments. It's crazy because he began his career, his finance career, as a loan originator for Countrywide in the inventory. You guys all remember Countrywide. Well, some of you guys probably do, while serving as a firefighter, driver, engineer in Key Largo. I didn't even know that, Joe. Okay, now I know.
Ah,
Entered
okay.
into the hard money and private lending space in 2016, helping investors fund deals beyond traditional banks. He started developing. That's another thing which is awesome, man. He started developing in 2019, guys. So if you guys want to know about developing, he's the man. Combining investment strategies and real world education. And just to let you guys know, he founded Duke Allen and Company in 2021, not only providing fund solutions, but also teaching investors how to leverage others, people, money, OPM, to building lasting wealth. With further ado, I'd like to welcome my great friend and partner, Joseph Castaneda. Joe, take it away, buddy.
What's up, fam? Happy Monday, everybody. Bobby, Big J, man, it's been a while. Rebecca's the boss. How is she doing? How's everybody doing?
She's great, man. She's great. She's on her way back home.
Good, Vijito, good, man. Really appreciate you guys giving me the opportunity to share our journey with you guys, what has worked for us, what we see in the market. I'm gonna go ahead and share my screen here. Mine. Bobby, we've never spoken, but I know that you're big with the company as well, man. It's a pleasure connecting. This is what I love about social media, about connecting with those from different markets, different backgrounds. And like how I met Josh and Rebecca is through NAREP many years ago. And so here we are. They've actually come to a few of our projects here. Probably what was it in 2020, Josh?
Yeah. No, it was actually, yeah, no, I think it was 2018, man. 2018,
2018, something like
2019,
that.
something like that. Yeah, I remember that's when you were just beginning with Duke and Allen, man. That's a long time ago.
Yeah. Yeah, so it's a journey that many go through. Real estate, as many know, it's you got to have a thick skin. You have to have a solid team. You guys are phenomenal, a great leadership, and and like I said, I really appreciate you guys giving me the opportunity to share our journey here and share our value add. So, all right, can you guys see my screen here? We're good? Yeah, all right, good. All right, guys. So let me stand up here because I get animated here trying to teach you guys
You
how to
might want to
leverage
put it
other
in.
people's
You might want to
I'm
put it in
raising my
presenter
camera
mode.
on my desk here. All right. So everybody, if you don't mind just putting yourselves on mute. I know you guys have questions, any type of concerns. We're going to be having a Q&A session towards the back end of the presentation, but let's go ahead and kick it off. My name is Joe Castaneda. I'm the managing partner of Duke Allen and Company. We're a private lending firm based out of here in Atlanta, Georgia. And what we do is we help finance investors, your clients, and also you guys as agents, your fix and flip projects, you're buying whole rentals. Bobby mentioned Pad Split. Let me tell you guys, Pad Split is a cash cow of a platform. If you guys haven't deep dove into this strategic way of investing, the time is now. Affordable housing, which on the rental side of things, let me tell you, that population is huge. And when it comes to renting out by the room, we finance projects of that magnitude. And I'm going to tell you a little bit more about it towards the end of our presentation. But today we're going to be talking about how to invest in real estate using hard money loans. We're going to be going over strategic scenarios, enhancing the profitability of real estate investing. Once again, I'm your host. I'm Joe Castaneda. Duke Allen is a firm renowned for its distinctive approach to real estate investment and project finance. We specialize in delivering capital solutions in scenarios where banks and other financial institutions are unable to engage due to factors such as time constraints, complexity, and specific criteria. We specialize in short-term hard money loans and long-term buy and hold financing, which would be DSCR financing, which is perfect for pad split, assisting real estate investors across the United States in achieving success, growth, and endeavors. We are not only lenders, but we also are real estate developers, investing in manufactured homes and ultra high-end builds. Guys, so we do everything from the spectrum of flipping to new construction to developing land. We've done it ourselves. So when we speak to your clients and even you, your future investor, we're speaking to you with two sets of tones. One, as an underwriter, will teach you what is it we're looking as lenders in your market. And second, as real estate developers. Like, I'm not here dressed up in my suit. No, I'm out there with my contractors. I'm out there paying contractors. I'm out there having to deal with inspectors, weather factors, supply companies. So we talk to you and we educate you and your client at the same time. So the question that everybody wants to know, if you're not in the investment world, many might not know what a hard money loan is. And The true definition of a hard money loan comes from not that it's hard to access the money. On the contrary, guys, the money's already printed. We just got to go get it, right? The reason why it's called hard money is because it's attached to a hard asset. Your one door, which is your single family, your two-door duplex, your triplex, your quad, an actual asset that's not going anywhere unless, you know, if God says, hey, I'm going to have a hurricane, you know, come through here, that house is gone, right? But other than that, it's attached to a hard asset, meaning it's not moving, meaning I cannot finance a tiny home. I cannot finance a mobile home. I could possibly finance a DSCR manufactured home because that home is already tied down, anchored to the land, to the footings, and it's not moving anywhere. Once again, unless God swoops it out, that property is not going anywhere. I could finance that on the investment side. Okay. So a hard money loan is a form of short-term financing secured by real estate assets, commonly utilized by real estate investors. These loans are provided by private lenders or specialized lending firms. Rather than conventional institutions like banks, a hard money loan serves a swift financing solution for real estate investors, requiring immediate capital and possessing used as collateral. One, is secured by real estate. Two, is expedited in short-term financing. And three, it's independent of borrower's credit, income, or tax returns. That's correct, guys. We're not verifying tax returns. You could have gotten fired yesterday, and I could still finance you this. No tax returns. Guys, we're not going to ask you for 2 years of tax returns. We all know we're agents. We're 100% commissions. We are, you eat what you kill, right? And so many of you guys or your clients might have a self-directed IRA. They might have some capital they just inherited from someone passing on, or you won an insurance claim. Anything of that nature, we'll accept that. And we don't have to verify, you know, your income, if you're employed or not. Guys, it's asset-based. Does the deal that you bring to me make sense in that market?
Hey,
What
Joe,
is a fix and flip? Yeah.
Hey, Joe, real quick, you might want to put this in presentation mode because the slide doesn't fill the whole screen.
Oh, I'm sorry. Let's see here. My apologies. Is that better?
There we go. Yeah, it's better.
Perfect. Okay, so all right, good. What is a fix and flip loan? A fix and flip is a fun real estate investment strategy where you buy properties that need some love, give them a makeover, and you sell them for a nice profit. You purchase a property for a great deal, right? You fix it, you slap some makeup on it, and you enhance the property. And then once you enhance the property, you sell it for a better price. Easy peasy, right? In a perfect world, that's how it is. Now, as an investor, we're the last ones to eat. You pay the lender, you pay interest, you pay Uncle Sam, which is your invisible partner that always wants their cut and they haven't done nothing. You have to pay your contractors, you have to pay tax, property taxes, insurance. And then when everything is said and done, now you get to eat. Now, I've done projects where I make 6 figures on a flip, and I've gone into projects where I've lost $30,000 as an investor. Now, yes, this was at the beginning stage of my career or my journey in investing in real estate, but you have better days than worse days. The only difference is that if you have a solution for whatever challenge is going to be coming up front, you will be perfectly fine. It's when you don't have a solution, you don't have a game plan, that's where you're going to be in trouble. So that's when we sit down and we go over, we do preliminary underwriting on any project. We'll tell you, hey, listen, because of X, Y, and Z reason, we see that you're going to make profit. Or vice versa. Hey, listen, maybe this deal might not be for you because you're overpaying. The value's not there. Maybe the renovation budget is not up to par to get it to where you need it to be. Or it's just too big of a project for you. You're just brand new. Like, we get it. You want to get into a project. You want to get into an opportunity. But to jump into full gut renovation versus makeup on a pig is day and night, guys. So we'll sit down and we'll go over different scenarios with you guys when the opportunity arises. So terms and conditions, let's talk about that. Everybody wants to know hard money, and there's like a bad taste in people's mouth when they hear hard money. Okay, they say, oh, it's too expensive. I'm like, you're right, it could be expensive. Now there's also a saying, you don't step over dollars to pick up pennies. If you're telling me I've made several deals that I've made 6 figures, guys, 6 figures in 5 months off one project that I had to babysit grown men and women, and I made 6 figures. And at that moment in time, this was 2019, they were charging me about 18% annualized, which is about 1.5% a month interest on holding this note. After I paid everybody back, I walked away with 6 figures. At that point, I understood, hey, you know what? Yes, don't pay too much attention on the interest. Pay much attention as to what you could possibly make. Because there's always a cost to borrowing money, especially when there's no risk to you. Okay? So yeah, interest rates start off right now in this market at 9.9%. Terms typically 6 to 12 months, depending on how big the project is. If you're just only, changing cabinets and floor and painting, you don't need it full permits. Now, if you're rewiring the electricity, if you're redoing plumbing, if you're moving load-bearing walls that you need an engineer report, yeah, you're gonna have to pull permits. And yeah, depending on what county you're in, it takes several days or weeks just to get an inspector out there, right? So it depends on the size of your project. Payments, your payments are done monthly, and it's just interest only. So for instance, let's just call it easy numbers. Let's say you're at $100,000 loan at 12% a year. That means it's 1% a month. So 1% of 100 grand is $1,000. Easy math, so you could know how that works. So if you're asking for $100,000 loan and you get approved, then you're only paying $1,000 a month until you pay us back the full balloon loan. It's real simple. Either you sell it or you refinance it. But as long as you pay back the loan, you're only going to be paying interest on what the loan amount is. Financing percentages is 70% loan to value after repairs, meaning the future value. And we could reach up to 100% of project cost. Yes, we have 100% financing right now in this market, which means that if you fit the 70% formula, I will fully finance your project risk-free of you. There's not many brokers that will be able to finance these projects at 100%, but we can. Okay. There is no minimum credit score for certain programs. Okay. We will do a background check. We want to make sure that there's no bankruptcy, there's no open liens, no judgments, no misdemeanors or felonies. Okay. We don't check personal income, taxes, job status, none of that. We don't check none of that. Why? Because we're a private loan, we're a commercial loan. We're going to lend against your business entity, your LLC. Show me you're in the compliance with the state that you're investing in. Because many of you might have investors outside of Florida, or maybe you are located outside of Florida. We'll be able to finance these deals nationwide. Okay. And our closings typically take within about a week to 10 business days. So guys, 10 business days, Saturdays and Sundays don't count, and holidays don't count. So as you're very transparent with how the program works, then you set the expectations for your clients. So when they submit, they tell you to submit how many due diligence, how many days of due diligence, or when to close, you could help them and say, hey, listen, you know what? Joe and his team, they could close in 14 business days, give or take. Let's go ahead and set the expectation. That way we have ample time to do an appraisal, get title back, and get the proper builder's risk policy to fully cover the loan. All right. 4 factors of hard money loans. Okay. As you can see, starting from the bottom, the project power. That's what we focus on. The strength of the project. This is your base of underwriting. The deal has to make sense. Everything else we could work around. Okay. But if Bobby brings me a project in Tampa and he gets me a purchase price, a rehab, an after repair value, and he tells me, Joe, I think this is what is worth, and I do quick preliminary underwriting. If the deal makes sense, then we're off to the races. I'll tell you, hey, Bobby, based off this, we still have to conduct an appraisal, but based off this, if you're telling me this is true, your comps that you're providing to me is true, and it shows up on the appraisal, then we could go ahead and get into your rate and terms. You want to get some sort of terms before you move forward, right? So we're going to be looking at experience on paper, not as an agent, not as multi-million-dollar agents, no, not as a GC that has built Dubai times 10. No. Investors on paper means I want to see Bobby's name on a HUD or Bobby's business entity on the HUD. And if there's a business entity, show me your operating agreement that you are part ownership of that entity. That's going to show us experience on paper. Give me HUD statements. Because HUD statements, I could easily go to the county and look up that address and see who are all the owners. So that to me shows me that you have experience on paper. Your liquidity, that's your next thing that we'll look at. Liquidity, how much liquid cash you have. Because if I ask you to bring 15% of 100 grand, I want to see your down payment of $15,000 plus closing costs, which would be an additional 3 to 5%, and reserves. What do we mean by reserves? If Bobby gets approved for 100% financing, he needs to start the project with his own capital, with his own resources. And those resources has to be cash, not a HELOC, not a business credit card, not Home Depot, Lowe's, Ace, Sherman-Williams. No, he has to be liquid. Liquid means cash, meaning, Bobby, go to the ATM, pull out all your money right now. Go to the branch manager at a teller and say, I need to pull out all my money. Somebody says, what's your liquidity position? That's exactly what I need to know is how much money are you liquid? Don't tell me that you bought NFTs. Don't tell me you've got crypto. Don't tell me you've got jewelry or artwork or stocks and bonds and annuities. I don't care about that. I need to know how much liquid you are, because if we're closing in 7 days, we have to close in 7 days, or else you or your client is going to lose out on their earnest money, right? So if I know up front what you got to play with, I know how to spearhead the file. Remember, I'm a broker. I'm not a direct lender. So I'm your friend. Tell me you have a bankruptcy. Tell me you've had a foreclosure, because I know that I could fit that file with a specific program that will allow past bankruptcies. Guys, we've gone through it. It's called life. We've gone through divorces, breakups, both business and personal, health scares, that it sets you back, doesn't make you a bad person. But if I know these things beforehand, before submitting that to an underwriter, things become a lot smoother. And last but not least is credit. That's the last thing that we look at versus a traditional loan. A traditional loan is the first thing to ask, hey, what's your credit? And we look and do a tri-merge credit. And if your credit is not up to par, then the other three things don't matter. Because if you don't have your taxes, if the deal doesn't make sense, then you're done. Credit here is the last thing that we're going to look at. Now, credit and experience, like I said, is going to determine your rate and terms when it comes to a hard money loan. All right, some quick abbreviations, guys. ARV, after repair value. This is what is the guess value of the property once it's been fixed up or renovated. That's why we do an appraisal, and it's going to give us an after repair value based off the current status of the property and a budget. Your rehab budget is going to tell me, hey, I'm going to invest 50 grand into this property by doing mechanicals, which would be HVAC, plumbing, electrical, maybe the roof. You're going to be doing, cabinets, shaker cabinets. You're going to be doing light fixtures around the house. Light fixtures could be anywhere between 20 to 25 light fixtures in any given home. Bathrooms, kitchens, flooring, landscaping, all of that, you can package that up into a rehab budget form that's going to be given to you by our team. And it does all the numbers for you. So it'll add up everything for you, and it's user friendly. Loan to value ratio. This is the percentage that shows how much of a loan's values compared to the property value. You can find this by dividing the loan amount by the property's value. And we're going to go over here in the next couple of slides. Your loan to cost ratio. Your loan to cost ratio is going to be AKA your down payment. If I tell you, Josh, we're going to cover 90% loan to cost, that means Josh is going to be bringing the difference of 10%. So many people get confused, the loan to value ratio abbreviation and loan to cost abbreviation. One tells you how much I could lend you based off the future value. And then the other one's going to tell me, hey, Bobby's asking me for 100 grand, 70 to purchase the home and 30 for the renovation. So total is 100 grand. And I tell you, hey, Bobby, you know what? Congratulations. I'm going to cover 90% loan to cost. In other words, Bobby's going to bring the difference of 10% of 100 grand. And at the end of the day, his down payment is 10 grand. TPC is your total project cost. Bobby's buying it at 70,000. Bobby needs $30,000. Total project cost is 100 grand. Once again, if I tell Bobby, hey, I'm going to cover 90% of that, Bobby's bringing 10%, which is $10,000 of 100 grand. Many of you guys know CC, closing costs. These are the expenses that come up when you're buying a property, like recording fees, attorney fees, taxes, and more, depending on, if you got to do a mobile notary, a mobile closing, a mail away, all of that's going to be tallied on your Alta and your HUD. OP, origination points, AKA is how realtors, us loan officers get compensated. Just like you guys get compensated 6% on the buyer and 6% on the seller in a perfect world, that's pretty much how we get compensated. So every point is 1% of the actual loan. So if your client is getting charged 5 points, it is 5% of the loan. If they're getting charged 1 point, then it's 1% of the loan. So in this scenario, if Bobby's loan amount is 100 grand and he got qualified for 3 points, then 3% of the loan of 100 grand is $3,000. And that is all paid at closing. Rule of thumb, guys, and you guys already know this, but I just want to reiterate this. On the investment side, everybody wants to sell quick. Everybody wants to accept the cash offer. Let me ask you this, Bobby, let me ask you this. I need to sell this property tomorrow. And the property, I'm just going to sell it to you at $25,000. Are you going to give me that $25,000 directly, or are you going to give that to the title company?
Title company.
Title company, right. No matter what's going on, Bobby is never going to close on a deal unless title is what?
Clear.
Clear, yes. So a lot of sellers, a lot of agents don't really understand how private money works. It's the same thing. You're never going to buy something cash unless title is free and clear of any type of judgments, liens, electric, whatever it is, mechanical liens. Until that is not clear, we're not closing. And sometimes that property is in probate and they don't even know it. And probate could be 3, 6, 9, 12 months, depending on if they could contact all the heirs on this actual property, right? So it doesn't matter how quick we could close. It's a matter of, hey, how is title ready? I've closed $1 million deal in less than 24 hours. And this is on an investment property. If title is ready and the terms that I'm getting my client make sense to them, we're ready to close, guys. Understand this. Hard money, private money, banks, Chase, Truist, US Bank, whatever it is, we need to lend capital. We're your friends. There's a stigma out there. Oh my God, they don't want to let me borrow money. No, there are steps as to letting you borrow capital. We have to lend notes. We have to create notes. We have to lend this money. Trust me, I want to get rid of all this money, but the numbers have to make sense for both of us. You have to make money as an investor or agent. And we have to make sure that our capital is secured by an asset that makes total sense. Not every deal is a great deal. And lastly, not all money is good money. So always do right and lead with, like, well, I know with realtors, you have the code of ethics. It shouldn't be driven by money. This is people's livelihoods, guys. So when we're doing your preliminary underwriting, it starts with the agents, with realtors, giving them proper comps, comparables. I had a scenario where I had a very good friend of mine, realtor. She sent me a lead for a fix and flip. She had it already got on the contract. It was a wholesale deal from New Western. I'm pretty sure you guys know who Western is on the investment world. And you know they have high earnest money because they're wholesalers. And so we did the appraisal, and the appraisal came back at 475. And when the appraisal came back, I showed it to my client. I showed it to the realtor, and I'm like, hey guys, unfortunately, it didn't come back to that 700 number that you guys told us, right? So the agent was just going at it, like, oh my God, Joe doesn't know what he's doing. They're like if I was just born yesterday. So I'm human. So is everybody else. So I'm like, okay, prove to me, show me comps, show me what you're seeing. So maybe because since I'm not the one doing the appraisals, a third-party servicer, maybe they're human too, and they dropped the ball and they gave the wrong comps. So good. The agent that sent me this referral for a fix and flip project sent me a comp, and it was 700. And they're like, you see, Joe, look, I have a comp here that says 700 within a quarter mile. And so I'm like, okay, good. I'm like, man, listen, I apologize on my behalf. But, oh, wait, your comp is a new construction comp. And you're doing a fix and flip. You never told me you was going to tear this asset down to the studs and build new and copy and paste what this comp is. And let me tell you, I told him, get your agent on the phone right now. And I literally sizzled that agent because it put me in a very difficult position because the agent just wanted to make money. And it's not all about money. It's about relationships. It's about longevity and doing the right thing. Not just getting somebody into a scenario where they just lost $10,000. And I'm like, listen, you threw me a lead for fix and flip. You're showing me a new construction comp. Seasoned realtor. But just remember, you're batting for your clients. You want the best for them, not just throwing them into the field out there just because they're new. And just because when they close doesn't mean that your position is done. No, because when they close, guess who's going to sell that property for them on the back end? It's you. So you're eating twice off of that one transaction if it's done correctly from the beginning. And of course, COE's close of escrow is pretty much, hey guys, hey, those three letters we love, right? We want to make sure that we're going to be wrapping it up, putting it in a bow. We're going to go and celebrate and the start of their journey. All right, 70% rule, guys. All right, let me see here. I want to pick somebody here that is, or Josh, since you know your team, pick somebody on here. I wanna do some classroom assignments here.
Let me check who's on here.
That's on the phone. I mean, on the computer, on the camera.
Yeah, I'm looking for. I don't know. You know what? Since Bobby loves flips, let's go, Bobby. You go for it, man. Let's go.
You're on mute, bud guy.
I said he probably wants to test somebody else. But
yeah,
I'm down.
I want to test somebody else. All right, let's do
Carla, put yourself on camera. Get on there, Carla.
Yeah,
Luz, are you there, Luz?
Are you calling on me?
Yes.
Yes, ma'am.
Oh,
How are you?
okay.
¿Cómo está? Where you
Good, lo
from?
más bien, gracias.
¿De dónde eres?
New Jersey. I'm in New Jersey, downtown Jersey City, right across World Trade.
Okay, love it, love it, love it. Okay, so Luz, all right. So
Sí.
take out your calculator, because this is your best friend here. When you take out your calculator and you show your client, you mean business, and you're seasoned at what you do, that's going to separate you from any and everybody else. And you already know word of mouth is the best marketing tool here, especially when you're in the investment world. Everybody
Right.
wants to become an investor. I could guarantee you this: if I come try to pitch you to sell life insurance, you're gonna be like, I ain't got time. But if I tell you, hey, you want to learn how to invest in real estate, usted dice, hey, ¿a dónde?
Heck yes.
¿Qué tengo que hacer, right? So,
Right.
go ahead, take out your, go ahead, take out your calculator, right? So your 70% rule is a suggestion that most would spend on a fix and flip investment property of 70% of the after repair value. After subtracting the renovation costs, so you could make sure that you have a profit, okay? So let's do this. After repair value, okay, in your market, you know your market better than anybody else. Just pick a nice number that's in your market on the after repair market.
800,000.
Cha-cha. All right, so we got $800,000, right?
Yes.
Good, perfect. Multiply that. Now hit the exact same buttons, because everybody does a 0.70 there, and then it just throws off the math. Perfect. So we're gonna multiply that by 70% loan to value. Does everybody get 560? Yeah,
Yes.
I wanna see who else is getting 560. I need thumbs up. I need everybody to be interactive. Good. If you guys look like you guys just woke up, you got lagañas in your eyes, just hit the little emojis at the bottom. I want to make sure everybody's in tune. So 560. If the appraisal comes back at 800, I'm gonna let you borrow 70% of that, which is 560. 560, guys, is your total project cost, your TPC. Meaning you have to, within this number, you have to do two things. You have to purchase the property and renovate it, rehab it with $560,000. However you cut that pie, that's what you're working with. Okay? Now, Luz, let's say you found this property and they sold, they're like, it's a good friend of yours. And say, Luz, yo te quiero, es una amiga from high school, Hey, I'll give it to you at X price. And you're like, okay, cool. Whatever that X price is. You go and visit the property. You do a visual inspection. You do a 360 interior and exterior. You take Josh with you. He's your contractor. He's your handyman, right? And he tells you, Luz, this is a big property. It's a 2-family, 2-story home with a basement, and your renovation budget is going to be $250,000. 250. So take this number and subtract 250,000. What are you left with?
310. 310,000.
310,000.
Mm-hmm.
Give me a second. Good, 310,000. That is your MAO equation, which is your maximum allowable offer. You cannot pay more than $310,000 for that property. Okay, now, Luz.
Yes.
If you know your max to offer is $310,000, what would be your first offer that you throw out?
I would do 3 even.
Good. Yes, good. You could do 301, 302. You could do 275. You could do 260. The worst they could say is what?
No.
Okay, good. But they're gonna say, hey, listen, you know what? Because I know you, we're family. Hey, I can't do 265. I can't do 300. 305, because it's abuelita's property and 305. Like, good. Your profit is in what? You make your money
Well,
when you do
come
buy.
again, Joe?
Yeah,
Yeah.
you make your money on the buy, on anything. If you're buying cars, if you're buying things to flip, you always make your money on the purchase, because you're buying a buffer just for in case something happens. Man, that 5 grand is possibly 1 or 2 months of interest only payments that you just gave yourself a cushion for that, right? So you always want to throw out a number. Throw out a number. Even if your client tells you to throw out a number and you think it's stupid, guess what? You don't know that the seller, they're going through some sort of hardship. Right now, they're thinking of probably about Labor Day, and they're like, I want to go wall out for Labor Day, and I don't want to get stuck with this, paying taxes and insurance. And Luz was like, yeah, 265. And they're like, how about 285? Can you close in 10 days? And you're like, Joe, I need to close this up because I'm at 285. My max was 310. Let's run it. Let's run it. So that's how you have your maximum allowable offer. You work backwards. You take your ARV, you multiply it by 70%, you subtract the renovation budget, or somewhat close. It doesn't have to be dead on. You just want to have an idea as to, hey, how much can I really pay for this? Because if they're selling this property at $410,000, that means you're above 100 grand from your budget. That means that you are 100 grand less in your budget, in your renovation budget. Guys, always respect your renovation budget. Always respect your contractors. Listen to this closely, guys. Pay attention. Your pulse, your lifeline on projects are your contractors. No more nickel and diming. Yes, call 3 different painters and get estimates. Get your fillers. Yeah, feel your market, because your market always changes, especially right now. And I hate to say it, the way the government is doing certain things, it's hurting everybody. Okay, and we have to speak about it because they look like us. Let's call it what it is, right? And so what happens is, when you used to get great deals, now you're paying somebody that has legal status here almost double of what the last person was doing it. Right.
It's already happening here, big time.
I'm a real estate developer. I'm feeling it.
Yeah.
I'm feeling it. But that's why I have contingencies, and we'll talk about that in a little bit. Contingencies in our budgets because of what ifs, right? So knowing this, guys, if you respect, like I said, you respect your contractors, they will bat for you 1,010 times. It's happened to me over and over and over with me, my team. There's sometimes that I wake up and they're like, Joe, listen, man, we just got here on site and they vandalized the property. But we already went and covered the windows so they won't keep on getting into it. So those are things that I don't have to think. They already know I'm going to tell them what to do. I already know I have to pay for them to board up the house because you have delinquent individuals going out there going nuts. And sometimes we have a great relationship with my contractors. I have to, because they also have families. If you respect their trade, trust you and me, you're going to have a very, very long journey in real estate investing. All right, how to access a property conditions. We're looking at the building, the structure, electrical, the plumbing, and other important areas. It's not just you, but your contractors. So for instance, Josh, ask me if I'm a GC.
Hey, Joe, are you a GC? No, you're not.
I'm not a general contractor. I don't have a license. I'm a land developer. I don't need a license for that. I just develop land into new construction. Do I have to know codes? Do I have to learn how to hang drywall? Do I have to know what type of PVC piping or what type of grading and silt fences and how do you do a trench for your silt? I don't know. I don't need to physically know how to do that. What you need to understand is you need to be resourceful. You need to know, hey, I know a guy. I need somebody to draw me up an engineer report. Hey, I know a guy. I'm not an architect. I don't know nothing about that. My architect is a genius. But he explains to me how to read blueprints. I don't have to have a license to do that, but to make one, yes, I need to be certified. But to read and understand it, no. You don't need to know every intricate detail, every intricate material or materials used for a flip or a new construction. You just got to know enough so nobody comes and just spoon feeds you crap, right? So when you do your 360 of your interior and exterior, you want to have an idea as to what is the square foot in this market for renovating and square foot for doing new construction. Your market value, you're going to figure out how much you could sell this property for once you've taken it over and made a makeover on it. Check out similar properties for comparison. Now, comps. Traditional comps are very different from investment comps. I've seen traditional comps go out as far out as 5 miles, right? Those are traditional, and that's what you guys are taught, which is fair. Let's switch it up to investing. Investing depending on the market, depending on the population, depending on vandalism and fraudulent activity like Memphis, Tennessee, and Baltimore, Maryland, everything changes. So let's say in Orlando, your typical comp is within about half a mile. Orlando is a big market. Population is heavy. The position is heavy. So we're going to go half a mile. There's no way right now in this market that there has been no sales in Orlando. No, there's a boatload of sales. Okay. Now, the type of structure, if you're looking for a duplex, right now in this market, to find a duplex like next door is a challenge. It's not like an everyday, oh, it's a duplex. No, it's I don't say it exists, but I can guarantee you your duplex is probably 3 to 5 miles out from the next duplex, depending on the market. Okay. So depending on your structure that you're the market and the structure you're trying to get appraised, they could go out half a mile, 3/4 of a mile, maybe 2. Maybe if it's in a rural area, then we could actually expand a little bit more. And when we're talking about comps, let's compare apples to apples, not new construction to fix and flip. Now, if you're buying an existing structure with the intentions of tearing it down and doing new construction, yes, I'll go ahead and start looking for comparables of new construction. But if it's a flip and it's a 2-story, 4-bed, 3-bath, I'm going to be looking for 2-story, 4-bedroom, 3-bath. If your house is a 4-bedroom, 3-bath ranch, which is a 1-story asset, I cannot take a 2-story asset as a comp because it's totally different. We're comparing apples to apples.
Hey, Joe, we've got about 7 minutes left. Did you want to do any Q&A, or you want to try to finish up?
Okay, so last but not least, right here, guys. You guys want to become a referral partner? We pay hundreds of thousands of dollars in referral fees, guys. If you guys bring us somebody to get their fix and flip or new construction or DSCR loans, guys, I'm going to take care of the team. That's why we've grown. Because you guys know MLOs, they can't give out any type of cash incentives. We're private money. We can't do that. Guys, for more information, go ahead. Take out your phones. Follow us on social media. My name is Joseph Castaneda, CEO of Duke Allen & Company. 305-522-6126. My email is jcastaneda@dukeallenco.com. Giovanna Vargas as well, 817-528-5774 at jvargas@dukeallenco.com. If you guys are old school, like you might have MySpace. You can find me in MySpace at Joseph Castaneda. No, I'm kidding. I'm kidding. Guys, any questions, any Q&A session here, just just follow us, because we also do a lot of project walkthroughs on our luxury modern builds. We do manufacture homes. We do fix and flip. So we're very active in our market. So if you guys have any questions, I would love for you guys to reach out, not only for loans, but for actual questions on projects. Questions?
I don't know if we have any in the chat, but I'm gonna go ahead and give you some. We only have a few minutes left, so I'm gonna give you some rapid fire ones. All right, you ready?
Right.
All right. So on the loan to cost, do you or do you not require down payment on the loan to cost? Because you mentioned the 100% financing, but then you said, hey, we might require you on the loan to cost to put a certain percent down. So what is that? Is there a down payment or is there not?
So it depends on the markets. So right now, Florida, unfortunately, doesn't have 100% finance. We have Texas, Georgia, Alabama, Tennessee, the Carolinas, and Ohio. We have 100% product. But in Florida right now, we have a 10% product, 10% down.
Okay, so 10% down on whatever the project costing, which includes the purchase price and the fix-up cost, correct?
Correct, yes. Purchase and renovation. 100% of the renovation is going to be covered by the loan.
Okay. Second rapid fire question. Experience. How much experience do you require?
Zero experience.
Okay, so you don't have to have previous flips to get a loan.
No.
That's big. Okay, that's important for you guys.
And no experience for new construction. Just throwing it out there.
Okay, that's big, guys. That's usually a hang up on a lot of hard money folks. So I'm trying to get out the differentiators. What makes Joe a little bit different here? Points.
You know what, Bobby? Hold on one second. You know what I loved about that question is that I was able to walk some projects with Joe when I was up in Atlanta with him. And let me tell you, if you guys ever want to lean on someone that want to learn this business when it comes to hard money and projects and all that, this is your man. He knows the ins and outs of everything. He took me through that whole house. And I'm telling you right now, I never had an instructor teach me the way he did. He was like, yo, this is what we look at. This is what we look at. So if you guys ever need someone, man, reach out to him because he's really, really the real deal when it comes to this, man. Go ahead, Bobby.
Josh, thank you, man. Thank you, brother, for the kind words. Bobby, points start off at 2 points. That's very important, guys. So credit and experience are going to determine your rates and terms. Now, if you're just starting, you're going to expect higher terms, higher rates, right? Now, here's the cool thing. I know we're tight on time. If you're missing experience, and let's say Bobby is open to working with you, he could bring in his experience under your entity, and now you're granted his experience like yours. Yeah, so we could make things happen.
And just to confirm, Chris asked credit score. I believe there's no minimum credit score, correct?
There's no minimum credit score, but it's going to help you determine your rate and terms.
Yeah. So, I mean, obviously the better borrower you are, the better terms. If you're in the 500,
we financed a client of mine that had a 480 credit because life happened, but he was heavy liquid. He had money. It's just he had a divorce, and you know how that goes. It just gets a little challenging.
Yeah. Okay. Good stuff. Well, we got 2 minutes left.
Yeah.
So we'll wrap this up. Joseph, man, awesome. I'll be getting in contact with you. I thought I might have heard you. Do you guys invest yourself? Does Duke Allen buy their own project, any like multifamily projects or anything like that?
So we're investors. Yes. We look at deals within the Atlanta market. And I mean, depending on if it's a DSCR rental, we're open to it. We'll also do a lot of subject twos. But yeah, we're always open to entertaining any type of asset. Now, Bobby, Josh, thank you very much. Really appreciate it. If you guys want to do one on DSCR or even pad split, I mean, I would love to extend our education to you guys, to you and your team, and really ramp up the investment side, because there's so much money left on the table on the investment side. Just because realtors think that, oh, I have to be an investor to, no, you just got to be resourceful to bring those resources to your clients.
This is awesome, man. I think this is huge. I mean, especially when it comes, since we have Passway coming to Miami, I think this is big, man. So thank you so
Awesome.
much, Joe.
Awesome.
Joe,
So,
do you cover New Jersey? I'm sorry, Bobby. Do you cover New Jersey?
Yes, absolutely. Yeah, we do.
there we go.
I know it.
Got somebody
We do
with her
we do
old school
fix and flip,
calculator.
new construction,
Get
and
that,
rental.
get that old school calculator out, Didi. Let's do
It's
some
about
deals.
That's 30 years old and it's kicking it. So you know what?
Yeah.
It's still going. It doesn't die.
That's an
If
That's
my
anticipate.
right.
cell phone dies, that calculator is
And then
alive.
key
It's
with
taking
the
me through a
big
lot of
button.
deals.
With the big button. All right, guys. Listen,
And
reminder.
yeah, any
build that-
questions, guys? My number's on the screen. You
Bobby's
can send me a beeper code wherever you guys want. I don't judge. Let's make it happen, guys.
Awesome,
Thank
guys.
you
All
so
right.
much, Joe.
Wrapping it up. We got buildatc.com. Remember, that's coming up August 3rd. We got our
21
YouTube
days
channel,
away.
EXP 21 days away. We got EXP Global Alliance on YouTube. Make sure you subscribe. And that's it. Go make some money. Go be an investor agent. All right, guys. Thanks, Joe.